Hello and welcome to today's webinar on major life events and your insurance needs. Presenting today is Charlene Wild, Senior Vice President and Assistant Secretary at AFMA, and Neil Pelletier, Manager of Membership and Life Insurance Sales at AFMA. Before we begin, here's a little background on our association. AFMA is the longest-standing not-for-profit association that empowers military families with affordable financial solutions. We accomplish this by being the premier provider of affordable life insurance, expert investment management, and customized residential mortgages and exclusive survivor assistance services, all for the military community, not for profit. As a reminder, this presentation is educational. It's for general information only and is not specific investment, legal, or tax advice for any individual. Do not rely on this presentation alone to guide your life insurance decisions. For individual advice, please contact us directly. Now, without further ado, I'll turn it over to our presenters to begin the presentation.
Thank you, Kathleen, for the kind introduction. Life is full of different milestones that vary from one individual to another. Our experiences, both good and bad, will forever change us. We might not come away with a permanent limp or a new name, but we will be changed in sometimes significant ways. More often than not, these milestones entail the need for change that can affect your lifestyle as well as your finances. Today, we are going to discuss 4 specific milestones that historically have significant impacts on your finances and more specifically, your life insurance needs. From the birth of your child to the death of a loved one, life is full of moments that leave a lasting mark on the human heart. And while emotions run really high, it's helpful to talk with your family about potential implications regarding major life events. At the same time, life is also full of small moments, from planning family vacations to holiday celebrations to also new employment or career change. It is important to pause and consider financial considerations during all of life's moments, big or small, so you can focus on the here and now. Today, we're going to discuss 4 major life events and both the financial and insurance implications of each one. The first major life event that causes many of us to evaluate our insurance needs is marriage. Thinking about the future no longer involves me, but it is now we. The word dependent might become a word that is used in financial planning for the very first time. I know it was for me. Neil, why should newly married couples consider life insurance?
Great question, Charlene. With marriage comes shared financial responsibilities. Now that you're married, you share your income and your debt. Major financial decisions about your future, from having children to buying a home or starting a business, is made together. You are now financially dependent on each other. If you and your spouse depend on each other's income, life insurance provides a replacement of that income to keep the surviving spouse from immediate financial hardship. Now is the time for you and your spouse to review your current life insurance coverage. There are many types of life insurance policies, from term to permanent coverage, to consider. Make sure you have the right type of life insurance and the appropriate coverage amount to meet the needs of your new and potentially growing family.
Thanks, Neil. I know my husband and I chose term policies early on in our marriage, but for many, insurance is not part of their financial planning until their family begins to grow. It is a very exciting time in our lives, and it seems as if everything is changing moment to moment, day by day. But it is crucial to take a few moments to stop and reevaluate in order to ensure you begin to build a strong financial foundation for the next generation. What insurance considerations should a young family have?
Well, as your family grows, your financial responsibilities grow. It's time to assess your insurance again to determine if it meets the current needs of your growing family. Aside from the daily cost of raising children, there are other costs that need to be considered when determining your insurance needs. The first is childcare. Childcare can be a significant expense for families. The loss of a spouse puts immediate stress on the family finances. Whether both spouses are working or only one spouse is working, life insurance can provide the financial support to the surviving spouse needed to care for young children. And then there's education. I've personally put 3 children through college. Meeting the cost of tuition alone on one income would be nearly impossible. Life insurance provides peace of mind knowing your children's education is covered. In healthcare costs continue to rise. Benefits from life insurance policies can be used to pay for medical expenses. And then there's quality of life. Death of a parent can be a traumatic event for children. They now face life without a parent. Life insurance allows the surviving spouse to limit additional changes to the children by remaining in the same home, keeping them in the same school, and remaining close to family and friends.
You know, Neil, you have made some great points about life insurance to mitigate cost for loved ones left behind. But what about purchasing life insurance for children?
I'm glad you asked. Although we are not financially dependent on our children, you can start building a solid financial base by purchasing insurance while they're younger. Whole life policies are a popular option. Coverage lasts a lifetime, and rates are locked at the age the policy was issued. They will not change. Whole life insurance also accumulates cash value over the life of the policy, which can be used for college expenses. Whole life policies can be purchased in smaller amounts, and as the child grows into their own life milestones, they can add coverage to meet their growing needs. Whole life can also provide peace of mind knowing your children have a base of coverage they can build on.
You know, Neil, is Gerber life insurance that we've all seen on TV similar to the whole life policy you just discussed?
Yes, there are a few different versions of whole life insurance policies out there, and Gerber Life Insurance is a whole life policy designed specifically for young children. This policy gives them the option to purchase additional insurance regardless of health as they grow into their own life milestones. AFMA provides a similar whole life insurance product called Generations Plus.
Thanks for the clarification, Neil. That's really insightful. So far we have discussed 2 major life events, marriage and growing family. These 2 events naturally lead into our next milestone, which is purchasing that first home. It may not be your dream home, and it is probably not your forever home, but it is a monumental event in our lives. It is, for most, your largest asset and where we begin to build a solid foundation for future financial security. Neil, how does purchasing a home impact my life insurance?
For some, our biggest asset is our home, and our biggest liability is our mortgage. In the event of death, the surviving spouse may be forced to sell the home or could lose the home in foreclosure if the mortgage cannot be paid. So it's an important time to reevaluate your current life insurance coverage. Your current life insurance may replace your income and provide a solid financial foundation for your children, but does it protect your mortgage? There are 2 options to consider when deciding on the best approach to protecting your mortgage: mortgage protection insurance and life insurance. With mortgage protection insurance, the principal and interest portion of your mortgage is covered. If you die with a balance on your mortgage, the policy will pay the remaining balance to the bank or lender. This eliminates future mortgage payments for your spouse or heirs. The cost of mortgage protection depends on the amount of the mortgage, your age, and your health. Guaranteed acceptance policies are available, so if health is a concern, this may be a good option. However, premium payments stay the same even as the mortgage amount decreases. With life insurance, the insured owns and controls the policy. The insured determines the amount of protection, which can be more than the mortgage. Your premium payment and coverage amount are fixed, providing a more affordable option. Most importantly, the beneficiary of the policy has the flexibility to choose how to spend the life insurance benefit. The benefit can be used to pay off the mortgage, to fund college expenses, pay off other debt, or pay for final expenses.
So many options to think about, Neil. I know when we bought our home, we were bombarded with so many offers in our mailbox, but we chose in the end to increase our existing term life insurance. Our next and final significant event is retirement. Up to this point in our lives, we have used life insurance as a tool to provide protection for our loved ones, to prepare for the future. Well, guess what? The future is now.
For many service members, there are two retirements: military retirement and civilian retirement. Both require a review of your insurance needs and overall financial well-being. Let's look at military retirement first. When you retire from the military, there are decisions to be made during this transition into the next phase of your next career. As an active duty service member, your Service Members Group Life Insurance, or SGLI, provides $400,000 of protection. At retirement, you're given the option to convert your SGLI coverage to Veterans Group Life Insurance, or VGLI, within 240 days without evidence of good health. Because VGLI is guaranteed coverage, your premiums may be significantly higher. If healthy, we recommend you explore other options. Term insurance is the most affordable option to VGLI, and if healthy, will save you money. Another option service members need to consider, along with their spouse, is the option to take Survivor Benefit Plan, or SBP. SBP allows a retiree after death to ensure continuous lifetime annuity payments to the surviving spouse or their dependents. The amount of the annuity payments are based on a percentage of retired pay.
Thanks, Neil. I know my husband and I are making those decisions right now as we go through our part one of our retirement. But I'm really curious to hear, what is part two?
Well, Charlene, part two of retirement is what we've been planning since marriage, buying a home, and having children. And hopefully our planning is paid off and we're on track financially. At this point in our life, we may have reduced our debt or accumulated assets. Our children are now adults and no longer financially dependent on us. We are ready to retire and enjoy the golden years. We may no longer need life insurance. So as we assess our needs at this point, we should have a clear view of our financial picture. So take action. If you've gone through any of these life milestones, review your life insurance. Is the coverage amount enough? Are the beneficiary designations up to date? If you don't have life insurance or if you need additional life insurance, get started today. The first step is the hardest, but don't be intimidated by the process. Applying really is simple. If you're hesitant due to specific medical conditions, there are guaranteed issue policies available with no medical exam. Remember, life insurance is not for the insured, it's for the beneficiaries. Protect your loved ones for a secure future.
Once you've taken that first step, it's really important to do your homework to ensure you're getting the best rates available. Many company sites, like AFMA, have a needs analysis on their webpage to help you figure out exactly how much life insurance that you truly need.
Well, thank you, Charlene and Neil, for that informative presentation. We appreciate you taking the time today to speak with our members about these important life stages and how they affect your insurance needs. So we're going to go ahead and break here for now, but please don't hesitate to reach out to us for any assistance whenever you need it. If you have any questions about this presentation or anything else regarding your life insurance needs, feel free to reach out to Charlene or Neil using the information here on the screen. We reach out and help our military community every day, and it is our absolute pleasure. So if you found this information useful, we encourage you to please share it with your friends and family, and know that our membership grows stronger every year because you introduce those in your military community to AFMA. Additionally, a recording of this presentation will be available at afma.com/webinars, along with other past webinars. Thank you again to everyone listening for joining us today, and we look forward to our next opportunity to assist you.